Alright. We are back. Ha ha ha. Okay, so I have a doozy of a day today. I have no idea how long I'm gonna be here. We will see. Depends on how energetic I am as I'm talking to you guys about a whole bunch of topic. Okay, so bear with me. All right, so let me pop this open here so people could see there. Chat. Hi, Manuel. Thank you for joining. Alright, so what's going on today? Hi Sharon, thank you, happy Friday. I don't know, anybody saw the markets today? It was crazy. Of course, it has to be the most busiest day of my most busiest day. Isn't even a good sentence to string together? No. It was kind of busy at work, so I didn't even have a chance to look. And then, boom, when I look at it, I was like, wow, Bitcoin's down. Now, I don't know how long or how low it's going to go, but I did buy some, loop ring, at 30-something cents. And then it went down to 28 cents. So, of course, regret buying it yesterday. Literally, I just bought it yesterday, and it was like, argh. So now I'm down like 15%. Hey, this is the nature of like crypto, right? I had some dry powder, that's why I did it yesterday, and it just happened to be yesterday. So, am I bitter? No, not really. I know I'm gonna hold it for a long term until the crypto does what it does. But hey, there's a risk of it going to zero, right? And that's the nature of investing in Bitcoin, in crypto in general, and let alone some like no name, quote unquote, no name alternative coins. Now, I see value in Loopring, that's why I bought it, because it's, it could be, be used as a platform to do a whole bunch of stuff. Now, this downturn perhaps is as a result of bonds and the bond market, and such. So, what happened in the bond market is kind of the opposite of what the Federal Reserve is telling us, right? They keep saying that we might be cutting if the data presented itself, but again, the inflation is going up. It's still at 5. Sorry, it's still at 3%. So, if the Fed is indeed data dependent, they're gonna have to raise the rate, right? That's just the expectation of the market. The CPI, PPI came out, and it was kind of like less than the expectation of inflation, but it's still inflated. I hope that makes sense. So essentially there's still inflation rate that is not 2%. That's what I'm trying to say. And so if the Fed is playing us again, they might be doing a head fake thing to try to scare the market, and that's probably the result of this as well. Apparently gold's surging in price. That's another thing. And just in case you don't notice already, gas price went up as well. So that's inflationary. It's like a crazy market over here today. So is this the market crash that we've been looking for 2 or 3 years now? Perhaps it is. But hey, no matter what the Fed is doing, if GME has the money to weather this storm, we will be fine, right? And not only fine, but gets to scoop up a whole bunch of company at a cheaper price than it is today. And this is why it's such an important event to talk about, because, hey, we are standing to benefit either way. So I've talked about this before in terms of the bond market, how it's related to how it is related to GME. As a shareholder, either way, let's say the Fed raised the rate, right? Well, what happened? We have a marketable security, right? So if the Fed raised the rate, we're going to be able to kind of earn on top of that risk-free, because it's the government and all that stuff, and you get to buy the debt of the government. Now, if nobody wants the debt of the government, that could be a reason why we don't do a long-term treasury bond, because when the rate goes up right here, a yield goes up like this, as the market dictated today, So if you look at the month-over-month over here, in 1 month, 6 months go up and 3 basis points. 3 basis point is like this, right? So 0.3, that's it went up. So GME has been parking at 6 months to 12 months if you read the SEC filing, right? And so we're able to make at least 5.13%. And of course, it's somewhere in the middle there. So a little bit more than 5.13%, right? So if that's the case, that's good for GME because we have some marketable security there. Now, the only thing that is not good is the price action, right? Because if if the S&P 500 goes down in price in a very violent way, as expected, of course, people are talking about it. And so, they see all this indication or indicator and all that stuff to kind of determine, hey, this is the top, perhaps, and that's been predicted for a while. Now, that doesn't mean that it's not going to ever, reverse course and go back up again when the Fed comes down and say, hey, we're actually going to lower the rate. So it might have a little bit of more boost before it become a crash that we're kind of looking for. Now, the news media keep telling you it's a soft landing, right? So we'll see if it is. Now, I don't know at what level it's going to come down to. This is the previous all-time high, the second all-time high, so to speak, right there. So if it bounces off of that, support, if it's going to flip as a support, then okay, that's technically a soft landing. But even then, it comes down from here to there. That's 6% drop. Not saying it's going to drop, next week or anything like that, but it's possible. So when the sharp drawdown, usually that's what happened to the stock market. People panic, they sell, every single thing, right? Including Gamestop. And so that's why it's important not to panic. When you buy into something, you hold it for a long term, and you just chip at it slowly. You don't over leverage. That means you don't have to buy, or at least force yourself to sell the share when you need the money and all that stuff. So make sure you have an emergency fund, right? Don't over leverage. Don't borrow money to buy call option or put option or whatever to try to front run people, or the hedge fund or whatever. Do this slowly and you will win out. This is a long game here. Not a financial advice, obviously. Just a something I've been doing slowly, right? So that's good. As far as the cash secure put or whatever, you could do that too. If you have the ability to buy 100 shares right now and you want to wait until the price comes down, you could write a cash secure put at $9 or $10 right here, and then you collect premium that way, right? You could do that as well. I've done it before. Currently, I don't have any cash secure put, but I do have some call down pretty like it's like 20%. So I have not closed out my call. Of course, I have like 2 years to wait for that. No, 1.5 years to wait for that to play out. So the strike price is low enough for me to be comfortable holding on to those call options. That's why I did it that way. Let's see, what else did I do? I did buy some SoFi just to sell the covered call on top of it. So I'm protected from the downside if it indeed happened next week. So let's see. I do watch SoFi from time to time. But I think because of this news of regional banks going bankrupt and all that stuff, small little banks is going to, affect SoFi. I am still having my own price target here, just off chance here. I don't know why I'm talking about this. But this is my price target. This is when I start to accumulate more, and this is where I sell my cash secure put to. That one is pretty long dated one too, so I'm not in the rush to cash out or close it out yet. Now I'm gonna wait until a couple more weeks to see what I'm gonna do with that one. I might close out at some point and flip long again, so I could do that. Now the reason why I do it on SoFi is because I'm not highly convicted as in GME. Because if I look at, just briefly before I go into AMC stuff, the reason being is that I don't like the balance sheets that I see so far, because they do still lose money. Of course, this is a financial instrument, so it's a different type of analysis here that I might not understand, but I do like the company. I do like the company because I use SoFi as my banking account. I love the services. And yes, I mean, the growth on the top line revenue is pretty substantial. Now, the growth is slowing down at the moment, if you look at the growth, right? So it's from 60%, down to now 30%. So that's a good point of sell. However, they're still not making money. And on top of that, if you look at the cash flow, look at that. That's substantial, $7.3 billion. So I don't think it's going to kind of explode anytime soon, but it's a good concept to have. I mean, the fact that they have so high of a gross profit margin, that's a selling point to me, even though they're losing quite a bit on the profit margin. That's just my logic here. I know that there are people pumping SoFi, and I think it's too premature for me to jump in at the moment. And then on top of that, you have a retained earnings over here. Pretty substantial loss there. $1.8 billion there, retained earnings. So that means they lose $1.8 billion so far in the company. If they could achieve, more revenue, like increase more and more and more, okay, I will be, kind of buying at this price point. But my thought was to wait until it come down to 5 or 4, like the lowest level right here. So that's good. I mean, that's just my thought process there. Yes, as far as earnings concerned, look at the expectations. So I'm sure they are planning to kind of set a low expectation for SoFi to hit, and so that they could increase the stock price. So last time they were the expectation was 0.004, right? Now the estimate is, or expectation is 0.007. Now this could be because they're trying to predict the last year, right? I don't know. This is why I have this thought that when GME expectation, they raise the bar so high. But for this type of company that, that they own the most of, if you look at the institution ownership of SoFi, it's significantly higher than institutional ownership of GameStop. And so this is why expectation, like this analysis and all that stuff, expectation is lowered based on that. So that, anytime there's good earnings, a little bit of beat, right, they would, have a justification for retail to jump in. And of course, the big guy probably dump, anytime there's earnings and then dump on retail, right? Earnings, dump on retail. And this is the tactic that they use to, get you. It's pump and dump, like, serious. So institutional ownership now, I said significantly with a couple. It's still retail owned. I'm just saying that, sometimes, again, with that just 10% more, that's millions of dollars right there. But they could, get people to be interested in SoFi right now, like in the wrong time. I'm sure, SoFi is going to do well in years to come, but not right now at the moment. I mean, as far as like, staying behind, obviously the revenue is even lower than GameStop, and the net income is even, they lose much more currently, at the current moment in time, unless they could increase their revenue by, double that, which is a bit stretch, right? Not saying they can't. And so the analysts out there, of course, they want you to buy into it. So the lowest three, pretty, what is it called? Like gap. The gap is so high. I just stopped to say hi. Their light can go on forever. GameStop in the barrel. Yep, of course. Okay, so SoFi, the analyst out there thinks that the high should be at 14. Average is $8.90. Okay, so it's like 20% more than right now. I don't know about that, but that's just my thought process. I'm sure Kramer stopped trading SoFi and all that stuff. I don't know. It could be an inverse Kramer as well. Who knows? This just come up 9 days ago. And if you look at 9 days ago, what would you see? Hold on, let me see. 5 days ago. So what is today? Today is the 12th minus 9. That would be around here. 9 days ago was this one. So he stopped trading it and it went up a little bit. But again, maybe that's a signal to go long, perhaps. Who knows, right? Who knows? But yeah, as far as like the company history, they have not made money yet. Retaining losses $1.8 billion. So that's going to take quite some time for this company to flip positive. And the fact that that the estimate right here, is so low, I don't know. Again, serious. I have questions, when I hear stuff like that. All right, so let's look at the bond real quick. I know I just showed you this one, but what I'm interested in is the 2 years right here and the 10 years. So when the 2 years goes lower than the 10 years, this is when you start to panic, right? Meaning, it's a big indicator that, the market's gonna do something amazing as in like drop down pretty. It just ensued panicking, right? Meaning that most people would want to lock in the money in the bond market because they can't just park in the short-term bond market and just have a risk-free compensation for 5% or more, right? So that's the logic there. That's why they call it inverted or re-inverted yield curve and so forth. But so far, it seems like the market wants a higher rate because nobody wants to buy the U.S. debt, and at this point in time, that's why the bond value goes down, and that this is when when the banks are in trouble, right? So the logic is when the yield goes higher, and those banks lock in the long-term yield without adding more cash onto the bank because there's no new depositor to offset that, right? And so this is when the bank lose money because they use your deposit to buy security, to buy treasury bond. In their mind, it's the safest thing, but the Fed has been raising rate, or the market doesn't allow a cheaper money anymore because people are antsy, right? They're not convinced that the economy is going to do well. So that's the psychology that you have to understand, and I think this is why GME is so. It's important for GME to hold on one second. To pay off debt right away, and just doing that, it's winning the battle already because you don't want to fight the Fed, right? And I think Ryan Cohen is smart in that sense because he knew what's going on. I'm sure he studied extensively on the 2008 crash, I bet. And he understood it because he was compared to pet.com all the time. Running Chewy at the time. And he was famously saying that, hey, I didn't even pay attention to the pet.com thing. I was just, doing my job and trying to work out the numbers, see if it makes sense for Chewy to do certain things. Very methodical. Like, you want this type of leadership in your corner. Hi, Carter. Let's go Friday night, be more. Thank you. I picked up to 5 more shares today. 5 second before market close. Nice. One for each trade. Nice for next week. Yeah. I mean, doing it slowly. This is, of course, it's expected. For me, I have some dry powder still from my cash secure put on SoFi. What is it? Covered call on SoFi that I sold to the market. So I'm kind of leave it on the table a little bit. Just I'm expecting a kind of a little bit of pull down for the SPY at the moment, and it seems like it's kind of doing that right now. I don't know how far it's gonna go down to. So, do you have any thought on that, Carter? If you don't mind sharing. But to me, again, I think the bond market is the takes the lead here because of the yield. Like I said, nobody wants to buy our debt at the moment, and that hence why the yield have to go up because people are not going to risk their money to buy into it. Now, this is what I heard though. I saw something on Twitter. I don't know if it's real or not, but apparently and I've heard Janet Yellen, which is the Treasury Secretary of Treasury, talking about buying our own bond to kind of overinflated the value of the bond. So they could just print the money to buy the bond themselves too. So that That's happening as well. So perhaps the reason why the yield doesn't go up as quickly as the market wanted is because the federal or the treasury themselves use the printed money. Now I said printed, I'm not saying that they're physically printing the money. They're just, adding more zero to the computer and then buy that. Use that money to buy the bond from themselves. Again, it's a Ponzi scheme, right? I mean, same thing as a stock buyback, and you don't add any value to the company. You just buying your stock back. There's no value added in that sense, right? But because the supply and demand thing, when you take the supply out, you have higher demand, and higher demand drive up the price. So that's the whole point of stock buyback. It's very damaging to the overall economy. I have that thoughts. I know it's good for shareholder. I get it. If GME does it, I hate to say I don't want him to do it, because again, I want him to build that company from the ground up intrinsically, and that's in the long term. It's much more beneficial, in my opinion anyway, because you want a company to earn real value here. You don't want a company to prop up the balance sheets by way of taking on debts and all that stuff, because that's fake. It's fake value. It has nothing to do with the actual business itself. Yeah. So Carter said, I've read the PNC quarterly statement about the soft landing this summer under their risk statement. I only do minimal call puts. I have a long dated SQ. Okay, for 13 call. Okay. Now that is the short, right? You're expecting the QQQ, like the triple Q, to go down. So if you buy call, you're expecting the drawdown. Am I reading this right? Hi, Kristen. I think you're new here. Welcome to the channel. Are you friend or foe? Can you fake snore? Okay. Well, I'll take that as a compliment, but no, I'm not doing stuff. What's going on? Like, how did you find my channel? Are you saying that I'm boring? Is that what's happening? Okay, you could go. But anyway, so let's do this real quick. Friend, okay, all right. You have GME? Is that what's happening? Because usually, people over here are GME elitists, okay? Just kidding. I don't know. I'm not hardcore, but I do believe in the company in the long term. So it's just so everybody knows here. Okay, so what was I saying? So far, I did that. Okay. Let me try to see. All right. I got into a common war with the AMC channel. Not really a war, but I would love to address it real quick though. But before then, I wanted to look into this real quick. So, it seems like the short interest did indeed increase on GME. Now, the common conception is that there's a reason why these companies have short interest, right? And those short interests, obviously, we know what's going on. Perhaps they can't close. I don't know. That's my assumption. But this is a very high short interest. Even just self-reported. Whatever I see, I'm going to report that. Not say it's going to squeeze or anything like that. But if there's a good catalyst in this company, something's got to give, right? The fact that it's profitable already, now we need to fix our top line revenue. I know there's the naysayers out there saying that we're down 20%. We're not really down. We're just unable to make 20% more than we used to make. So that's a perspective that should kind of pacify the the meltdowner out there. But I've addressed this before because I think my main indicator would be net income, right? And this is what I'm going off of. I know, like, oh, how about 6 months ago you weren't go by net income or whatever, right? Well, because I see the trend. I think the trend is trending the right direction, right? I understand it's slow. It's kind of methodical, and it's like watching paint dry over here. And this is why traders hates this, Traders hate this stock for for a reason, because they can't make money off of it because there's technically no volatility, right? And this is good for investor, and this is why I'm here. This is why investing small, little, tiny bits at a time, and then you wait to reap the benefit later. Until the narrative change, the fundamental of the company goes the other way. Now, instead of, making money, they losing money, right, in terms of net income. So, the top line revenue, it is a concern, but is it really that much of a concern, right? If they are making the net income, right? So last quarter, like I said, right here, if you look at the last quarter right there, that's nothing to scoff at, right? The fact that they fall revenue down by 20%, but yet getting to make $63 million for that one quarter, that's a lot of money, okay? Now, the next step that we want to kind of go to, like, if we could fix this top line revenue, if we could just come out ahead, like, I'm expecting $10 million, right? $10 to $15 million. That's just my optimistic point of view. Because of the marketable security, right? We were able to, like, this quarter alone, this particular quarter, now we did have a lot more. I think it's $300 million worth of marketable security to make this $15 million. Now, if the Fed raise rate or the market calls for a higher rate, then, next quarter we are, instead of getting $6 million, we might be able to come out at $9 million, just interest alone. With that knowledge of, marketable security, you could tell that last time, let me see, hold on, sorry, right here. The last quarter one right here, we were only losing quote unquote, because, I think there's some operating income right here that I think that's IMX token agreement. There was a delayed liability thing that they have to. It's one of the agreements from IMX, and they have to pay like $57 million to that, and that was a one-time deal thing. So with that knowledge, they should have come ahead at $8 million plus last quarter one, and so that's not gonna happen for this quarter. So that's why I did, in my head, $10 to $15 million in the plus, right? If they could achieve that, that means that the next trailing 12, it's going to be, more than $60 million profit in the plus. So that's 10x from here. If the trailing 12, it's going to be $60 million. That's going to be 10x from here. So that means this is going to be, improving. PE ratio is improving as well. And then on top of that, if the price coming down even more, this is going to improve even more. There's so many people, hedge funds out there, and, pension funds and all of those fancy people that are up there. They are trading based on these type of indicator. And so all you have to do is just wait long enough for them to decide what to do. And again, there's only a handful hedge fund here that are shorting GME. Okay, now I know they're all play balls together here, but if you look at the ownership here, I know I showed this one before, just in case you don't see that yourself. Okay, hold on, let me see if I could find it here. No, I don't see it. Hold on. No. That's dumb. Alright, I'm sorry. I know, I'm boring. I'm trying to show us the institutional ownership right here. Okay, so I forgot to take a note. Now, you see this? Six institutional ownership are short only. So those are the only people that we are battling right now. So in the grand scheme of things, most institutions out there are long. Okay, long only. So we need to outlast these 6. That's all. And then the other ones, because they are long and short, they will flip long eventually, right? When there's no risk to owning the stock anymore, it's going to be flipped the other way. So, like I said, hey, it's only 6 people or 6 institutions that we need to beat out on, and and just the fundamental alone should do that. No problemo. If it's slow, then that means you as an investor, you get to accumulate more shares. So again, this is why investing is so. It's not easy, but yet it's that easy. If you catch my drift there. All you have to do is just wait long enough for you to reap the benefit. Of course, pick the right stock as well. I think I picked the right one here. Do your own research. I'm biased in that sense because I already bought into GME, so I've always said that. Guilty as charged. Okay, guilty as charged. Now I've heard people talk about how, don't marry to a stock. Well, what if you marry to the right person? You wouldn't want to marry to the right person for the rest of your life? What if this person makes you happy? What if this person is going to fit you? What if this person is going to, take care of you? All of that. Or you take care of each other. You kind of rely on each other, till death to its part. Wouldn't you want that in your life? Of course. Hey, Marantz, what's up? The man himself. You picked the right one. Right? I know, I've heard on your shows all the time, don't marry to a stock. And I'm thinking, it's like, shit, what if you married to the right one? Now, if you could marry to the wrong person, then okay, I said trust but verify type things. Trust that person, but if they're doing something shady, like Adam Aaron, for example, you would want to kind of hey, maybe you think of divorce. So, okay, yes, divorce and do your thing, right? And so, nothing wrong with that. You just have to do what's right for you. And what's right for you is to always look into this, trust but verify. Yes, I trust Ryan Cohen, but I need to verify to see this. If I keep seeing this trend, I'm happy. I'm happy, really. And this trend right here, I'm happy to see this trend right here. Now, this trend, I'm not very happy, but hey, it's not an end-all and be-all thing. I understand that people are up in arm about this one. How the top line revenue is down, therefore they can't do whatever, right? They can't do this, they can't do that. Well, they just did it. In my opinion, anyway. I'm going live tomorrow. I have spice for... Oh, okay. Thank you. Well, you could do it right now. I mean, I could go off live and watch you. I always enjoy your live, so I appreciate you so much. And you deserve all the accolades and all that stuff for all the crap that you have to deal with these people. Yeah, you know the schmeal. But if you live right now, I will end my live and join you. Thank you, Miranda, for stopping by. But anyway, so let's see. Okay. As I was saying, top line revenue, like you could sell anything. Like if they could figure out the profit margin that is right enough for the company, this is all you need. This is all you need. If they could turn positive, this is all you need. And you just have to scale that slowly, methodically, and then do it the right way. You don't have to over leverage, go on debt and all that bull crap that people are doing. And this is what I was thinking too, when people are telling you, oh, you have to like over leverage, they should use debt to do this and that. And I'm thinking, has there been any CEO out there in the market right now, okay, that are, number one, know how to run a company without debt? And I don't think so. I feel like every single company or CEO out there, they do not know how to survive without debt and leverage and all that stuff. And this is dangerous. This is the most dangerous environment that you have. And that's why they're filing for bankruptcy left and right. And I know, the private equity angle is looming as well, and that's kind of accelerating the demise, the demise of GameStop, of every other, meme stock out there that they are pushing. Of course, I hate when people say GME is a meme stock, and I know exactly why they do that. It's a psychological attacks, and it's an attempt to basket GME to be like a ridiculous things that, when it is a real company to be content with type thing. But anyways, go back to like the over leveraging. And so when they do that, when they are not operating in debt, they don't know how to make a profit, even without the private equity angle of it. Right? And so let's just take the private equity angle out of it. If you over leverage, if you have debt already, that's a norm, right? And so every CEO out there, that's all they know how to do. It's rare that you have a CEO that could do this like dollar for dollar type thing. And this is the value created. And just that alone have put GME just the top of my list because of that. And on top of that, in this high environment, high rate environment, you get to compound your saving by just buying marketable security. Yes, T-bill will amplify your growth because money is king, right, in this environment. Right? Cash is king type thing. That's why everybody just scramble for cash. Adam Aaron, scramble for cash, Take the wife out. Oh, nice, Miranda. All right. You go have fun. Thank you, sir. Appreciate you. Say hi to your wife, too. She's beautiful. Let's see. What type of a spouse is AMC? I know, right? It's terrible. If you compare it, if you're with somebody who's cheating on you all the time and say, oh, no, baby, I'm not cheating on you. It's like, really? And then you look at the Instagram, it's like, who is this person? You like yesterday, right? But anyway, so, and then of course, like there are people who still invest in AMC, and I don't understand it. Now I understand that there are new people, coming into the stock and all that stuff. They don't necessarily know what's going on, and this is the difficulty too. I think it hits us both ways for us as in like GME, investor out there. To battle, and this is what GME trying to battle as well, is the bad reputation, the bad news, like decades of bad press, right? And to me, this is an opportunity. Anytime people bashing on GME, I just smile. Okay, you'll see, right? You'll see. You'll see. I keep saying that because I know, intrinsically, this have some value in it. It's not like, again, I have high hopes for GameStop future here, but I need to be realistic as well to see, okay, how slow of the growth is it and how fast can they scale realistically, based on the economy that we're dealt with right now. And I think we're going to be a little bit slow for a while, and this is why it's so important to reserve as much energy as possible. So that we could strike at the right time. And when we do, there's no turning back, right? We're going to be off to the race, right? Now, I hope it's going to be 5 years, 6 years, 7 years, less than 10 years from now. But I'm willing to hold this company for a long time, as long as I see this trend going this way. And so, cash flow negative, that's something we need to address there. I mean, $200 million, that's a lot, but of course we're doing that to lower our account payable. So technically we're just again kind of lower our ability to leverage in terms of debt, right? Because we're paying the merchandise that we need on hand right now, operating debt, so to speak. Okay, so I hope I make sense. It is what it is. It's life. Sometimes you're wrong, sometimes you make no sense, sometimes you're boring. Just life. Okay, so let's see. I was looking at something here. EBITDA. Yeah, EBIT. Okay, so this is the one that we need to fix. We want it to be positive. I mean, EBITDA is already positive. That's good, but we want this one to solidify the strength of this company even more. So that's what I'm waiting for. As far as bankruptcy measures here, there's none whatsoever. Interest coverage, we're doing just fine there. Capital expenditure is negative this time, but that's okay. We could make it back. Oh, this is the one I was going to tell you. Now, my last live stream, I said that the inventory overturn is better when it's lower. We want it higher, actually, because so if you look at the indicator right here, hold on, let me look at it real quick, show you, so to correct my mistake here. Hold on 1 second, give me 1 minute. Okay, so if you look at what it means to have 4 to 6, okay, let's bring this over here. Okay, so an inventory overturn ratio between 4 to 6, which is GameStop is above 6, is usually a good indicator that restock rate and sales are balanced. So I said that it's better to have a lower number. The ideal is 5 to 10. 5 to 10, that's ideal. Because we want to sell more goods, but also we don't want to restock it too quickly either, right? And so the right balance is 6, 4 to 6, as like it says right here, a good indicator. Although every business is different, This good ratio means that you will either run out of product nor have abundance of unsold items filled up in the storage space. So therefore we don't need that fulfillment center, right, in York distribution center. So that's why we close it down, because we sell more goods, right? We don't need that space to hold that products anymore, and wasting money and all that stuff, like trying to maintain the building. So that's good. It's a good thing that we were able to kind of cut off those expenses. That is privilege. Why would you want to spend money when you don't have to, right? There you go. That's the whole idea. Is 7 a good inventory over turn ratio? So it says, see, between 5 to 10. Most industry. There you go. So we're in that perfect zone of product being sold. So that's that. So let's get to, I might end on this one, but I don't know how long I'm gonna ramble on and on here. Of course, I saw Mike the Marine video. He's pumping AMC again, just out of the blue. Again, I don't understand this now. His whole schmeal is that he's holding AMC out of loyalty, because he's a Marine. When he's set out to do something, he's holding it till the end, right? Now, of course, he's critical of Adam Aarons. You understand that Adam Aarons was not there for retail. Try to retaliate, going to the SEC building and all that stuff. I was, watching him while that's going on. Now, I salute him, sure, and I get it. When you're passionate about something, sure, yes, express that. I get that. But I think he's just fighting for the wrong company. The company that he should be fighting for is for a CEO that the level of Ryan Cohen. You cannot argue that the guy has been doing everything correctly, but yet. And this is why I wrote on his comment, and of course this person also kind of respond to me. So let's go to that comment right there in the bottom. Okay, it's kind of fun exchange. I didn't want to be disrespectful to people either, because again, hey, at the end of the day, it's just an opinion here. I just get bothered by the fact that people still give AMC time here. So I said GME is profitable, $1.2 billion cash, never dilute any of shareholders, been capital since the capital been raised from at the market offering, right? And I told them the amount, and it's close to there. $1.67 billion actually. Works for free, right? Alluded to CEO there. Bought his own shares and with his own money, yet people still give Adam Aron and AMC airtime. The media manipulates all of us, right? I was trying to wake people up, and of course this person was like, and still the stock goes down. Do you get it now? Or have you been paying attention? So this person is saying that, but the prices keep coming down. Therefore, something is afoot, right? I understand the whole short naked thing. The whole synthetic shares, the whole manipulate thing. I understand all of that. But my point is that if you park money in a company that have a CEO actively impeding on that progress of you trying to fight those short naked, what make you think that AMC and Adam Aron is not going to do it again? He's been diluting. He's been spending money that he doesn't have of the company. Sorry, my voice is going down right now. That he doesn't have, right? And doing so have negatively impacted, shareholder equity even more. And so if he'd done it many times, so how many times? So what did he do with that $2 billion that he raised, the initial, when the stock went up? He bought two movie theater or something like that, saying that he's pounding, he's playing offense now, right? So what happened when you do that? When you spend that money that you don't have, that you shouldn't have spent, right? It gives those shorts more ammunition, because then eventually you're going to have to go to the shareholder, which they did they did at the time. And it stopped the momentum, right? So you keep buying. And then what did he do after that? Buying a bankrupt gold mine, right? That is, just every bit of manipulation there to try to get you to think, oh yeah, they're just hedging, right? Because gold is going to go up in price, and all that stuff. Meanwhile, the mine do not make any money. There's no gold, there's no silver, there's nothing. They're not even mining. You see what I mean? So wasted money, and we all know why they did that. Is because they want to, give the hedge fund that they're related to some leeway here. Mudrick or whatever. So they do a backdoor dealing on the backs of shareholder equity, right? So again, what, $40 million at the time. And at the time, I remember this, Pantheon, I watched them, okay? I was in the early investor AMC as well, so I know all the story there. And then Pantheon come out and say, those are just like, what, $40 million? That's nothing, right? It's like, it's an old news, that it's not going to impede anything, and all that stuff. And he's always pumping AMC and just very knowledgeable about how the history of AMC is this and that, and where is he now? See what I mean? And he was the one that promoted the yes vote on Ape. Remember when Ape was introduced? Oh, it's going to, do this, it's going to do that. Has it? No. When Ape was introduced, people were like, and then what happened? What did Adam Aaron do? He didn't sell it at $10, $8, $7, $6. No, he didn't sell at that. What did he do? He waited until it was, 60 cents? And then on top of that, when you see the fouling, it was sold even lower than the market. It was like 52 cents or something like that for 20% of your company. And he did that backdoor dealing with Antara. You understand that? And then what happened? What happened? He did a reverse stock split. Combined the two, reverse stock split. Oh, he has to. He has to because he needs money. Why didn't you think ahead, project ahead 3 years ago? 3 years later or 2 years later, you might need that $2 billion, Did he? No. He must have been the dumbest, CEO out there to not know what's going on in the market, in the world at large. Right? What, you just going to think that, the Fed's going to lower the rate soon? That's not how you run the business. You have to, expect the worst and hope for the best type thing. In my opinion, anyway. So that's what Brian Cohen has been doing. He's expecting the worst. That's why he needs to hold on to that cash as much as he can. Or, the leadership or whatever. In order for the rainy day. Because we don't know what that rainy day is like. And when the rainy day comes, okay, at least we have some, cushion here. Even if we have to go back to shareholder, it's not going to be an arm and a leg. It might be 10% of the company instead of 80% of the company has to go to, whoever needs to control it or you need the money from. See what I mean? And so Gamestop is not beholden to anything, right? Adam Aaron, even if he has a kind heart, which I don't think, and want to save AMC, he cannot, because his boss is not going to allow him to. Okay? And so that's the problem, is that he's beholden to somebody, debt holder, bond holder, or whatever, right? And so if you want to buy a bond and kind of like speculate that way, sure, but AMC is categorized as junk bond. Okay, junk bond for a reason, because it could go bankrupt, and when it goes bankrupt, nobody's get paid anything. Yes, the bond holder might get paid some, but not the full sum. It depends on how much asset is being stripped down to, right? Shareholder, common shareholder will not get anything. You know why? You know why? I mean, ask BBY people. BBY people. You think they have anything with that share? I know, like, people are promoting Knowles or this made up thing. I don't know. Again, if it exists, I don't know. But you know, people still think that Ryan Cohen is involved in it. Bed Bath and Beyond. That's another stupid thing. Sorry to say that. Don't want to offend anyone. But hold on, let me see. So when AMC, I know Adam Aaron just tweet. We all know that. Hold on, let me see. Right here, shareholder equity. You don't have anything. You don't have any shareholder equity. Yes, this could go trend the other way, but how long it's going to be? Do you think the company's going to make $1.8 billion anytime soon? Right? And how long do you think the company's going to make $1.8 billion to get at least break even for shareholder? Right? Now, you could argue that, hey, you're not in here for fundamental. Okay, if you're not in here for fundamental and for the short squeeze, it's not going to squeeze because Adam Aarons is there to not let it squeeze. See what I mean? The leadership does not allow it, does not want it to do that. Okay? Because they don't have any stake. Nothing. Nada. Nothing. They don't care about what happened to this company. And if you're trying to say that, oh, you know, this hedge fund here and all that stuff, some of them is in here already. They own most of this company. Retail don't own this anymore because it's been diluted. Okay? So, I don't know. Again, there might be a gazillions of shares out there, but it's been diluted 50 times already. They still have some asset here. I'm sure this is why they're targeted. And so, not that the company doesn't have any assets. However, they need to dilute more and more. Maybe another reverse stock split. Yeah. And I'm sure I've heard it. Some people was happy with that. Right? So the operating expense right here, see, operating expense, and this right here. And on top of that, they have interest expense. So that's the problem with AMC. Jimmy, we get the money. You know, we get the interest on top of the money that we have. We don't pay other people interest. The government pay us interest. Does that make sense? I hope it makes sense. But anyway, so that was one, and then let me continue. Yes, I said yes. Which one do you think has a better of survival? Or is it a better chance? I should say. And then, well, GME was kind of dead along with AMC. That's why I hold both. And GME being a hedge fund now is the same as popcorn, candy, and liquor. So, honestly, I'm just here to take down the Fed, Federal Reserve, I guess. That's what I mean by that. And then he said, have you ever wonder why we went off the gold standard? Now I don't understand what that means per se. But as far as like, GME is being a hedge fund now, it's the same as popcorn. It's not the same thing. It's not. Popcorn, you need expenses, you need a distributor and all that stuff, and they don't make money from it. As it's more way for them to expand their revenue. I get that. Sorry about that. But it doesn't make enough for the company to pay off that debt, right? And if they can, it's going to take them a long time to do. Maybe 10, 20 years from now. How about that? 10 and 20 years from now. While company that doesn't have any debt can do it faster than 10 and 20 years. And so it's a matter of you thinking that AMC is going to be lasting 10 to 20 years from now. So, I don't know. Again, is this the popcorn revenue? I don't know. Is this the candy revenue? I don't know. But as far as, so the operating expenses is still elevated, while income or gross income hasn't done that quite yet. Again, in my opinion, if it survives, it's gonna take at least 10, 15 years for shareholder to see any kinds of gain from this, right? But in the meantime, you're paying into the bond out there, or the debt that is accruing. If you don't even make enough to service the interest expense, that's not good. That's not good, to say the least. So if you own both, I used to be on the same camp. I would suggest reevaluating your thoughts there or your investment. If not, hey, you do you. I'm not saying either way is fine by me, but I'm thinking GME is the only one. And so just be aware of what kind of company do you want to succeed in this environment. Do you want this to succeed, this type of leadership to exist, like Adam Aaron, just going out there boasting about all kinds of stuff but nothing to show for? Or a leadership that doesn't say anything but just, hey, look, there you go, here's my number, invest in it or not, that's on you. Okay? Go read it for yourself. I'm not gonna kind of hold your hand. It's like this is the decision of the investor. That's what you should do as an investor, is to at least know the company that you're interested in, and because it's important for your retirement. It's what you could retire on, and hopefully have a better life with that one. But so the right stock is here, in my opinion, right? And if you do the comparison, there's no comparison there. So to even put AMC as the same light as GME, it makes no sense whatsoever. But so in my opinion, will Adam Aaron dilute again or reverse stock split again? You betcha. He will do that, just that, and many more to come until he cannot squeeze out of out of retail anymore. And so let's they lose too much money, right? And on top of that, it's private equity, right? They load on debt, over leverage based on debt. They don't know how to operate cash to cash. Every time Adam Aram has cash, what does he do? He spend it. You know? It's like, really? Can you just sit tight with that money? No. You gotta spend it, right? You gotta do something with it. It's like, why don't GME spend that $1.2 billion? What are they waiting for? You know, it's not benefiting shareholders. Like, duh. It's benefiting shareholder. You know why? Because they don't have to go to shareholder to dilute even more. That's beneficial for shareholder. You know why? Because they have $1.2 billion in cash. They don't need to dilute to, you know, whatever future endeavor that they're interested in, right? So the fact that they hold cash is beneficial for shareholder. So don't contradict yourself here. Now, of course, look at this analyst out there, right? Look at this. Okay, now this is sell here. But look at the price target. Low is 4.7. High is 6.15. 7.15. And then high is $12. This is the analyst for you, right? Okay, strong sell, hold. Wedbush, they want you to hold GameStop. GME. Sorry, why am I saying Wedbush want you to hold on to AMC. Okay, that's a red flag right there, no? And so, again, this is why Moran said it is a hedge to GameStop. So if you have GameStop versus GME, both of them, one of them has to lose. Okay? And I don't think it's GameStop. And whoever this is want you to hold. And they think there's an upside to this, right? $15 or $12. I don't know. The sky is upside down. I have no idea what these people are smoking, right? But keep in mind though, even if it's like $12, that's $1.20 from the high, right? Without the stock split and conversion. That's insanity. So yeah, people are not going to ever make their money back. So good luck try to, you know, have those people return a gazillions of shares here, right? If this company struggling, if GME is struggling to get these people to close out their position, what make you think a company that has a saddle load of debt it's going to make them close out their position? Like, that's the whole point. But anyway, just me. I think that's all I have, you guys. I'm kind of like dying of thirst right now. So I'll end it here. Thank you, Carter. Carter said, cash is king. RC is making sure GameStop is protected during the turbulent times. Yes, of course. Yes, I'm preaching to the choir here, so feels good. Feels good to do. But yeah, thank you for Marantz stopping by. Thank you, everyone. Jay, Lionel, Manuel, Sharon, thank you so much. Let me see. And Christian, I don't know who you are, but yeah, I mean, doing great. Bitcoin gonna come up a little bit up again, right? A little bit, no, still, whatever. So it's gonna do what it does. I don't know if this is a weekend thing that they're crashing it and then pump it back on a weekend, and usually that's what happened in Bitcoin. Friday they dump and then pump it up on Monday, and so for liquidity or something like that. But anyway, thank you, Carter. Appreciate you. I will see you when I see you. Yes, thank you for tuning in.